Good morning. Hope you're doing well today. Today we're talking about controlling quality, financial control, productivity, and managing people. It's a lot of stuff to talk about. So I've broken this down into 3 different lectures, and this is chapter 13, part 1. So here we go. Every effective manager needs to be a pro at controlling. It's the only way you will know whether you and your department are on the right track. In this chapter, we present models for control systems and the control process to help develop your controlling skills. You'll learn also about financial controls, budgeting and financial statements, and how to calculate productivity. Understanding accounting is vital because you won't be in business for long if you can't generate profits, and controlling is your key to making a profit. Take at least one course on accounting, often called the language of business. You will also develop your skills at getting the job done through others by using coaching and disciplining models to improve performance. In previous chapters, we've covered planning, organizing, and leading. We now are at the control function, establishing mechanisms to ensure that objectives are achieved. To achieve your objectives, you need to control. Many sport organizations are also monitored and controlled by external bodies of governance, including most professional leagues. FIFA and its executive committee monitor all soccer activities. The IOC monitors all Olympic activities. The PGA is the regulating body for golf, and each individual YMCA is governed by the rules of the World Alliance of YMCAs. College athletics are governed by the rules and policies set forth by the NCAA. These organizations establish rules and regulations that every member must follow, but sport authorities such as the IOC look out for the interests of all stakeholders. For more information on the IOC, visit its website at www.olympic.org. So to begin all of this, you have inputs, and with that is preliminary control. This anticipates and prevents possible problems. One major difference between successful and unsuccessful managers is their ability to anticipate and prevent problems rather than solve problems after they occur. If preliminary controls work, you don't need to fix a problem. Effective planning and organizing are part of preliminary control, which is called feed-forward control. Standing plans that we talked about in Chapter 4 control employee behavior in recurring situations to prevent problems, and contingency plans tell employees what to do if problems occur. A typical preliminary control is preventive maintenance. Many production departments and transportation companies or departments routinely tune up their machines and engines to prevent breakdowns. Purchase only quality inputs in order to prevent production problems. In the transformation process, this is the concurrent control. Here, the actions are taken during transformation to ensure that standards are met. The key to success here is quality control. In team sports, a preliminary control is assigning positions and practicing plays for the game. However, as the game is being played, which is transformation, concurrent controls are used to select who plays what position and which plays to run throughout the game to win. Outputs or rework control are actions that are taken to fix output. You need to rework something when preliminary and concurrent controls fail. Most manufacturers inspect output before it is sold or sent as input to other departments in the organization. Sometimes rework is neither cost-effective nor possible, which can be costly. If Wilson Sporting Goods makes defective golf balls, which are the output, it is too late. The company cannot change the past. With customer or stakeholder satisfaction, that's damage control. Damage controls are actions taken to minimize negative impacts on customers attributable to faulty output. When customers get a defective product, damage control is needed. Warranties require damage control that can be expensive. You must refund the purchase price, replace the product with a new one, fix the product, or re-perform the service. Quality involves comparing actual use to requirements in order to determine value, and that Total quality management, or TQM, is the process in which everyone in an organization focuses on the customer to continually improve value. Without continuous improvement, the firm will lose business to competitors. Clearly, effective control mechanisms are needed to ensure quality goods and services. Controlling to ensure high quality and productivity is what this chapter is all about. Government agencies such as the U.S. Food and Drug Administration, or FDA, protect the health and safety of society with laws and regulations to control quality. Here we discuss some of the many organizations that set quality standards and award certifications. International Organization for Standardization, or ISO, is the world's largest developer and publisher of voluntary international standards. Most multinational organizations have ISO certification, and they require suppliers they do business with to be certified to ensure quality. However, ISO doesn't provide certification or conformity assessment. External independent certification bodies provide the ISO certification. This standard is based on a number of quality management principles, including a strong customer focus, the motivation and implication of top management, the process approach, and continual improvement. Recall from Chapter 5 that firms are commonly organized in some way into 4 functional areas. Operations makes the products. Marketing sells the products. Human resources manages employees, and finance manages money. Information manages information is a 5th functional area. It can be a standalone department, part of finance, or part of another department. Organizations have other departments as well. As shown here in figure 13.2, all departments have a systems process based on the workflow. Note that the marketing department product outputs go to external customers. The other department outputs stay within the organization and go to internal stakeholders. So, internal damage control is needed within and between departments. Review each functional department in figure 13.2 to better understand its system process. Every employee in an organization transforms inputs into outputs in some way based on workflow. A production worker makes a part of a Nike sneaker, which becomes input for the next person down the line, and so on until the footwear is completed. Every employee should therefore also use preliminary, concurrent, rework, and damage controls. Feedback is part of the process at every stage. Feedback is essential if the system is to improve. You can see that here in figure 13.3. Throughout the system, feedback circulating through all the functional areas improves inputs, transformations, and outputs while continually increasing customer satisfaction. Note that operations, marketing, finance, and human resources, or HR, provide feedback to each other and to MIS as well. Feedback helps organizations to continually increase customer satisfaction. So feedback is an important control and must be used at every stage of the system to continually improve performance. Many firms monitor often to increase performance and profits. Customer evaluation cards are only one example of feedback. You can see here the arrows represent the flow of feedback throughout the system's processes. So with the control process, you start at step 1. You set objectives and standards. Preliminary control is the first step in the control process and is the same as in planning, setting objectives and standards. That's chapter 4. Or objectives and standards are the ends and the plans are the means. Objectives are target dated and standards are ongoing that are part of the input process and are forms of preliminary control. Companies including Nike and Dick's want standardization in processes and products. To be comprehensive and complete, standards must address 5 criteria. Standards minimize negative impacts on customer attributed to faulty output by controlling quantity, quality, time, cost, and behavior. You need to measure performance because if you can't measure it, you can't manage it. But be careful how you manage. how you measure. That is what metrics you use. With standards, because incomplete standards often lead to negative, unintended results. Workers respond to what is measured and reinforced. So, developing balanced standards drives team and business success. Quantity. How many units should employees produce to earn their pay? Examples of quantitative standards include number of sales made, home runs hit, quarterback sacks made, or classes taught. Quality is how well must a job be completed to meet the standard. How many errors are acceptable? Quality can often be measured quantitatively, such as the number of defective products, interceptions thrown, coaching mistakes made in games, and poor teaching evaluations received from students. I hope to not get those. But other aspects of quality are often difficult to establish and measure. How does an administrator determine how good the teachers are in a sport management program? It isn't easy, but quality must be measured and evaluated. Time. How fast and when should the task be completed? When you assign tasks, it is important to specify time frames. Deadlines are a time-honored, time-based standard. Performance is also measured against specific periods, goals scored per season, annual graduation rate, home runs in a season, or profits per quarter. Cost. How much should it cost to make the product? How much should employees be paid? Employee compensation is a major cost to many organizations, and firms around the world are increasing controls to help cut product and labor costs. This is part of the budgeting function. And pro sports such as MLB, NFL, and NHL, the cost of athletes keeps going up. The cost is a major concern for team owners, and it is often passed on to the fans in the form of ticket prices and other costs such as parking, food and drinks, merchandise of attending the sport event. Behavior. Which behaviors are appropriate and which ones are not appropriate? Standing plans and control, especially rules that we talked about in Chapter 5, guide and control the behaviors of workers. Players are expected to be on time for practice and to behave morally on and off the field. Step 2 is measure performance. Prepare for steps 3 and 4. You can't measure objectives and standards. You can't control them. If you aren't measuring performance, how do you know if you are making progress and actually achieving the objective or not? Measuring also helps you find ways to beat current performance and beat or match that of competitors. An important consideration in the control process is what to measure. What are the critical success factors and how often to measure? It is important to identify critical success factors. The CSFs are pivotal areas in which satisfactory results will ensure successful achievement of the objective or standard. In other words, we cannot control everything, but as organizations, departments, teams, and individuals, we can identify the few most important objectives, goals, and standards without which we fail and with which we succeed. One important measure is customer satisfaction, because without customers, you don't have a business. These are CSFs, and you must control them very carefully. Possible CSFs for the MBA include improving team competitiveness, maintaining national television exposure, and improving marketing. Step number 3 is compare performance to standards. This determines if control is necessary, and if so, what type. This performance evaluation step is relatively easy if the first 2 steps have been done correctly. You are comparing what you want to happen to what actually is happening. So far, are you getting the grade in this course to meet your objective or standard grade? A performance or variance report, such as the one shown in Table 13.1, is commonly used to measure performance. Performance reports typically show standards, actual performance, and deviations from the standards. In Table 13.1, the golf club production results, although under the production goal and over cost, are good because they both deviate less than 1% from the standard. To determine deviation, the variation is divided by the standard. Managers need to be accountable for meeting the objectives and standards. When variances are significant, they should be examined carefully and fixed with rework and damage control. Step number 4, the last step of the control process is to correct or reinforce. During the transformation process, concurrent controls are used to correct performance to meet standards, or you take action to improve and meet the standard. But when the job is done, the product is made or the service is delivered. If it is faulty and it is too late to correct the problem, then it is time to, number 1, figure out why the standard was not met. Number 2, use the information to develop new preliminary controls. And number 3, implement the new controls so that the standard is met next time. When performance affects others, damage control may also be required. Learn from errors and mistakes by understanding their causes and implement changes that will prevent future errors or reduce negative consequences and errors to recur. Of course, when the standard has been met, there is no need for corrective action. Keep things running smoothly. This does not mean that the control process ends here. It's time for a little gratitude. Don't forget to praise your team for a job well done and to give other rewards such as bonuses. Also, continue to find ways to increase performance. Future correction. Here, rework to develop preliminary control. Damage control may be needed. Maybe you need to reinforce the standard or objective if it's met. Correction is not necessarily needed in that particular step. And the end is feedback flows back and forth at each step. An important consideration to the control process is how often to measure performance. 10 methods, which can be categorized by frequency of occurrence, are used to measure and control performance. Control frequencies are constant, periodic, and occasional. Constant controls are in continuous use and include self-control, clan control, and standing plans. The 3 I's that Pete Clark uses at the ranch are constant controls, and so is the 10-foot rule. If you come within 10 feet of customers, you always greet them cheerfully and ask whether they need any assistance. The 3 I's are detailed in the coaching corrective action that we talk about later in the chapter. A big question facing every coach and manager is, will my staff do their job if they are not monitored closely? The answer is that you must know your staff. Some groups need much less control than others. The issue here is one of balance, self-control, internal in employees, or is it versus imposed control, which is external, coming from managers. Too much external control causes problems, and so does too little control. So use contingency management that we talked about in chapter 12. This control is about organizational culture and norms, which are powerful ways to shape desired behavior. Organizations that use teams often rely on clan control, which is peer pressure, which helps prevent freeloaders. Remember in chapter 9, we talked about group control, which is another term for clan control, norms, and enforcing norms. Self-control and clan control are used throughout the control process and in conjunction with the 4 control types. Periodic controls are used on a regular, fixed basis, such as hourly, daily, weekly, monthly, quarterly, or annually. Periodic controls include regularly scheduled reports, budgets, and audits. The ranch management team provides the owners with monthly reports. Together, they develop annual and monthly budgets, and they have an annual audit performed. Scheduled meetings and reports. Those are oral reports in the form of daily, weekly, and monthly meetings to discuss progress and problems that are all common in all organizations. Written reports required on a schedule are also common, and they are typically sent via email. At Wilson Sporting Goods, the sales manager gets weekly sales reports. Vice presidents get monthly income statements, and regularly scheduled reports are designed as preliminary control. But the report itself is used when there is a problem as a concurrent rework or damage control, depending on the situation. Budgeting is one of the most widely used control tools. The preparation of a new budget is a preliminary control. As the year progresses, the budget becomes a concurrent control. At year end, it is reworked for the next year. A budget may require damage control if significant changes such as overspending take place for some reason. Budgets are common and essential tools, and they need to be constructed carefully, always with an eye on where costs can be cut even more, and actual costs must be measured against budgeted costs relentlessly. New budgets are preliminary controls. As the month and year progress, they become concurrent controls. At year end, they're reworked for the next year. A budget may require damage control if significant changes such as overspending take place. You will learn more about budgeting in the financial controls section that we'll talk about here in part 2. Organizations use two types of audits, internal and external. Part of the accounting function is to maintain careful and extremely detailed records of the organization's transactions and assets. Large organizations maintain internal auditing departments whose responsibility it is to make sure assets are reported accurately. Internal auditors also serve as watchdogs to keep theft, such as embezzlement and fraud, to a minimum. Most large organizations hire outside certified public accounting or CPA auditors to verify their financial statements. There are two types of major audits. Part of the accounting and management. Part of the accounting function is to maintain records of the organization's transactions and assets. Most large organizations have an internal auditing person or department that checks periodically to make sure assets are reported accurately and to keep theft at a minimum. In addition to performing internal audits, many organizations hire a firm to verify the organization's financial statements through an external accounting audit. The management audit analyzes the organization's planning, organizing, leading, and controlling functions to look for improvements. The analysis focuses on the past, present, and future. Occasional controls are used on an as-needed basis. They include observation, the exception principle, special reports, and project controls. Project controls are also in place for special golf events that involve corporate clients and other organizations. Observation is exactly what it sounds like. Designated people, video cameras, and electronic devices observing work in progress. Whether the work involves a professor giving a lecture, a pro athlete in training, or a machine making a golf ball. Observation is used with all four types of control. Management by walking around, MBWA, is an especially effective method of observation that we'll examine in more detail later in the chapter. The exception principle is about placing control in the hands of staff, unless problems occur, in which case people go to their supervisors for help. Corrective action is then taken to get performance back to standard. However, people, be they production line workers or CEOs, often shrink from asking for help or reporting on poor performance until it's too late to take corrective action. Special reports are when problems and especially opportunities are identified. Management often requests special reports which may be compiled by a single employee, a committee, or outside consultants. Reports can be verbal discussions. An employee can go to the boss to recommend an improvement. This is a form of reporting. So is a manager asking an employee what the problem is or asking for recommendations for improvements. For recurring or unique projects, the project manager needs to develop a control system to ensure that the project is completed on time and on budget. Project controls are designed as preliminary controls, but they can be used with any of the other three types of controls when schedules are not being met. Organizations understand that controls are crucial to their success. Therefore, you should learn to use controls well to help you achieve your objectives. Table 13.2 here summarizes controls. The types, frequency, and methods of control are listed separately because all four types of control may be used with any method. Recall how a budget changes its type of control over time and that more than one control method can be used at once. You need to be aware of which stage of the system's process you are in and of the most effective controls for that stage. Also, don't forget the 4 steps of the control process. And that is all that we have for today. We will be going into financial controls in our next lecture. I look forward to talking to you soon. Have a great day.